The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be on Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon Eastern Time. Right now, the moment that you're listening is the moment that we are right here at TFNN at 877-927-6648. What a great day to have call-ins. This is right an inflection point. It's a chance that we're making a peak F, a short-term top in the Dow. Haven't quite got the confirmation yet. We've taken preparations in my opening call. Not too heavy either way right now. If you were fortunate enough to get the exact open yesterday and go short, now you've got a good cushion. I contemplated. I thought yes, I thought no. I saw residual strength. You see, today you're looking at the residual strength. What is residual strength? Residual strength is when there is a sell signal of significance. Normally what happens is it is accompanied almost immediately, at least in my work, it is accompanied almost immediately with news events that are pretty market shaking. So if anybody remembers the day of the crash of October the 19th, 1987, remember that morning, early in the morning already, there was talk of conflict on the Suez Canal. There was this whole thing. It happens so often. It happens to be a conflagration, possible conflagration somewhere. Or there's just banking news. It's just horrible news. And that usually takes the market down. And what happens is, and we will see within another hour, rallies are very short-lived. When the tide changes, and I'm going to be talking about the tide coming up Wednesday, this coming Wednesday, it'll be in San Francisco at the Marriott Marquis. I was really lucky to be able to secure a room. Very busy time with conferences and conventions and all sorts of things going on there. And if you go to the front page of TFNN, you can check in, but it's beginning to fill up and there's just limited seating. So I need for you to register. I need to be able to give them numbers. So please, and of course there will be some walk-ins. You can't help that. So I need to know. I need to be able to confirm with them. So go to the front page of TFNN and check it out. It's going to be, it's a workshop, presentation. I just also want to meet people out there. We've got so many fantastic listeners all around the world. It's just great to meet them. It's just great to say hi. Oh, you put the name with the put the face with the name. It's great. So I've been looking forward to seeing you. And of course, it's going to be a very important presentation for me because I'm going to be talking about the tide, the shorter term, the intermediate term, and the longer term, and why it is so important to try your very best to trade the tide. Oh, during the break, I'm going to set up something because I love this particular chart that I've got from my CD introducing the ChapmanWave methodology. I must write that down. You know that by the time I get into all this, I will have already forgotten. Let me write that down here. CD, and all I need to do is this and that, and I will know exactly what I'm talking about. Now, where can I put it so that I see? Or maybe someone in the den will just remind me as the break comes up to get the CD chart out. So what we're looking at here, I've got the chart that you can see right now. This is the dollar. And, this is the one time I think that it's going to look a little bit better than the white chart. Look at this. Here's the dollar chart. You see that left side? Let me take this away. Whoops, get that out of the way. This particular chart here, you see that pattern? We've seen it so many times. Remember, in my Dow chart, this is what I show my subscribers every day and give a really detailed report on the Dow, what we're looking at. That's the 120-minute chart. Take it away. This is the chart I'm looking at. You remember that oval pattern, the pattern that has that body, the oval body? I call it the golden egg because if you can recognize it, look how nice it is, what it does. It breaks out. So is this now the head that is forming after you got the leg, the body, the neck, the head? This will be the beak. If there is a sudden slide in the next 2 days and you take out, I would say, to confirm that it's a peak F top and not a peak B. If the Dow starts to close under the 9-period exponential moving average, that red line, and goes underneath 14,500, I'd say, yeah, it's almost certain that it's a peak F. But I'd like confirmation. I'd like it to go into the 14,470s, and then I'll say, okay, short-term daily, you've made yourself a peak F top in the Chapman wave. Got to be careful. Now, when I'm looking at the dollar, I don't want to change this chart. I want to go to this chart right here. When I'm looking at the dollar, you've got the same pattern. You've got the leg. You've got a technique that I teach to my subscribers in my Master Trader series called the instant restart. There's no other technique that has it. Took me a long time and a lot of money to get this particular technique down. It's called the instant restart. And what it does, it says not only can you go to a new buy signal, but you can go all the way to a D, E, and even an F. Well, this went to an E. That's the way I'm counting it right now. So the dollar index has gone to A, B, and now C. And this is the neck formation. That says within a couple of days, the dollar should make some kind of a shorter-term top and probably come back into the body. Now, I had a question on the monthly chart, but let me first do the weekly chart of the dollar, because this is kind of important. The dollar right now is making another U formation. What do I mean by another? Well, look at this huge pattern. Now, I have a technique that I use where I take a very significant left side cluster. And often it's the first one that I want to take. I don't want to take the very top, 88.71. Hey, we haven't even broken the key support of 86 yet, resistance of 86 in the index. Why would I even want to talk about 88.71? I like to go step by step. I do not make these extravagant projections, because I find that extravagant projections have an extravagant way of bunking you right on the beam. I don't need that. So I'm going to be very conservative. I'm saying this is a potential unconventional cup and ladle. Not one of my favorite patterns, but if they work, they can be very strong. That says that the moment the dollar, if it breaks decisively above 84.10, first of all, I can be looking at, let me just move this for 1 second. Yeah, 84.10. Then I can be looking at a quite clear upside action where there's very little resistance based on the weekly chart. So that says, okay, great. MACD's at 85%. That's good. I'd prefer it in the 92%, but the MACD's expanding. Let's go to the dollar monthly chart. That's what the question was from someone in the den. I've been talking about the H pattern. Look, now here's the I wonder if I can squeeze this. I'm going to squeeze this. Look at this. Patterns repeat over and over and over. And what I found over the years, and it takes a long time for even me, who does this minute by minute throughout the day, to get in that head of mine that the accepting crash circumstances is a crash on the downside and a rocket ship explosive move to the upside, except in other than normal instances, you'll get an aberration. But in normal instances, patterns repeat whether going up or down. That's why I can get the arch formation to be a perfect match on the way down, as it takes that number of bars to go to the top. So now let me show you something else. In the techniques that I like to talk about, in the ChapmanWave techniques, you can get a large arch formation. Then you can get, this would be the H, the lowercase h that I talk about. And I was talking to someone over the weekend, and I've gone through this for 6 or 7 years now, because I've called the pattern the dreaded H. That's only because there was a period where many people were looking for a particular market, was the gold market, to go up. And I kept saying, be careful, we are making these H patterns. And if it breaks the left side low bar, that's going to be a dreaded H. You don't want to see that. Actually, I don't want to have the connotation at all. I just want the connotation of the letter H and what those three things that can happen. It either misses touching the left side low bar, it either touches it and then bounces up, there's a whole implication there, or it breaks underneath and continues down, or breaks underneath and then bounces right back. There are continuations for all those contingencies. So now let's not make it complicated. So there was the 1H going to a peak C minus, and that broke down. There was the large arch, which broke down and went to 70.70 and went to a peak B, a peak C minus, made one arch formation, then another one. Well, what is that? That's in the ChapmanWave CD introducing the ChapmanWave methodology. It is a lowercase h that goes into a continuous M pattern. And lo and behold, it feels like the dollar's great. Who was it on I think it might have been Larry Kudlow, one of those guys. That's the very first time I ever heard someone say King Dollar. Now, I know Tom likes to use the word King Dollar. He has other implications for the dollar. But I have to tell you, I don't see any king here at all. I just don't see it. I don't even see a prince. I just see lousy, dreaded H going to M formations. There's a chance. The question was, what is this line? This is the 200 period moving average, and that can take you to 86.80. I suspect, because, currencies tend to have very long-term movements, but this is just a sideways movement. Look, you usually have a long move. Look at this. If I go to the EUR-USD currency pair, EUR-USD currency pair. Look, long moves to the upside. And there again, the euro-dollar looks like it wants to at some point touch 1.24. But if it does that, that will give impetus to the dollar. Now, I'm going to talk about something in the dollar that is very important. The dollar, in fact, I suspect if you had to really measure the internals of the dollar, I think it has had a very strong rally, and I put that in the context of a power boat or one of those V12 engines that has this tremendous horsepower. Maybe it's not very quick off the starting block, but it has this tremendous horsepower. But sometimes the wheels turn. Oh, there's a very, very strong current. So that's the current, the Fed. That's why bonds, I suspect, are still holding so well in the upper range, because they should be much lower. That's why the dollar really should be King Dollar. It should actually be running much stronger, but I suspect that the Fed, the all-powerful Fed, is going bong, 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 whack a dollar, is just pushing the dollar down, down, down. At some point, they will not be able to carry that through, and the dollar will have a chance to move higher. I don't know if it will. I'm saying at some point they cannot keep that up forever, but they can keep it up long enough. So, yes, I think the dollar has been rallying. Yes, I actually think it's admirable, because it's against the tremendous tide of the Fed. If the Fed wasn't there, maybe the dollar really would be King Dollar and much higher. But I have to tell you, I look at this dollar and I shake my head and say, wow, you have been fighting the fight. And you've made another peak. You've made a peak D in the smallest and shortest time frame. And here's the USD JPY, the Japanese dollar yen. That's a very strong move. And that, in fact, is the context of a cup formation. That's different to the dollar, which is fighting a flat rectangle formation. Hey, I'll be back at 877-927-6648. Love to take your calls. Wow, I didn't even get the numbers. Dow's up 32, S&P's up 4. I'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus
and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the Dow's up 31, S&P is up 5, and we've got Travis in St. Louis. Hi, Travis, how are you?
I am doing well. Good morning.
Good morning. So, you'd like to look at...
Well, I'd like to look at Cadence Pharmaceuticals, but real quickly, I just had a quick comment. I just, the last maybe 30 days or so, just kind of been looking at some of my overall charts that I look at as far as individual names, and Apple just, it really is starting to bother me that you've got the largest component of the S&P 500 and the largest component of the NDX 100 down 40% over the last 6 months.
Right.
Yet the markets haven't blinked at all. And I'm just wondering, is it possible that it's leading, it's well ahead of the broad market over the next, say, 12 months or so, that the broad market's going to catch up to Apple? And maybe you can comment on that after I hang up, but it just really is starting to bother me the last 30 days that stock can't even catch a bid. It's just, it just kind of is starting to make me think that the consumer is maybe tapped out here. I don't know, but
you're making some very good points. Let's get to that immediately after we look at the stock that you want, because it is important. But it is important for Apple, but as long as there are other stocks to take over, it is important for the Qs and certainly the S&Ps and the psychology of the market, but there's going to be a point where they separate. So let's talk about that in a moment, but let's first, you've got a stock that you want to look at.
Yeah, I've been in Cadence since last July. It's a fundamental story for me, but technically I wanted to get your thoughts on it. I'm in it from around $3.75 to $4. I'm kind of looking at that 7.25 range to possibly unload all my shares and wait for a pullback, maybe around 5 or so to reload. But it's a great fundamental story going on. But technically, it's starting to get overextended, I think.
So let me just ask you this question here. You identified it. It was an IPO. Folks were looking. CADX is the symbol. It's Cadence Pharmaceuticals.
No, it's not an IPO. It's not an IPO.
Oh, what happened there? Back in October of 2006. That's when it came out, right?
Let me take a look again. It's not a new IPO. It's been out for quite a long time. I guess it did IPO in 06. The company itself has been around for quite a while, but the stock IPO'd back in 06. You're right.
I actually remember that because it was also at the time of the stock. I'm sure it was Cadence. There was a Cadence computer, Cadence in the software area. And I used to get them mixed up. So I did follow this for a while, and then it just completely off my radar. Didn't even remember it at all. So Cadence Pharmaceuticals, folks, had a high once upon a time back in 2007 of $17.74. And the most recent low was $2.56 in May of 2012. So you can hear how outstanding Travis's execution of his entry points were within a point of the all-time low. It's trading right now at 6.74, up 0.02. Now, did you say that you scaled in? Is that what happened, or did you just buy?
I made two purchases. I bought several shares around $3.75, and then another purchase around $4. So I'm trying to get long-term capital gains treatment on the shares, but I don't want to overstay my welcome if it's in a peak E, peak F, or something here that. It's not worth sticking around, but another few months I'll have long-term capital gains.
That's exactly why I wanted to ask the question of whether you had multiple entries, and you did. You had 2 entries. This is when you said to exit. I'm having a slightly different opinion in terms of of getting everything out. So let me explain what I'm looking at. You're right in the short term. In fact, as we're talking right now, this could be the near-term top for this, because there's a technique that I talk about very often. It's called the ChapmanWave cup and ladle. In fact, it's just absolutely perfect. I'm going to do this here so that people can see exactly how nice this is right there. I've identified a particular price point. This is one of the things that I like to teach. And that price point says there could be a left side, right side parallel symmetry from the right side, from the left side of the high. Let me just change the color. There we go. The left side high of peak D in the daily on the 16th of January at 566, it pulls back to a trough D. Now, anyone who knows the ChapmanWave methodology knows that Ds are most important. I like to go to the peak D. I like to pull back to a peak D. I actually prefer the upside for the wave count, the downside for the wave count, but mostly I like to use the technicals because it's the clarity on the upside seems to have greater import for some reason for my work than on the way down with the letters. The letters tell you a lot, but I like the entries to be based using the technicals as well, or the chart patterns. So now we've got an exact breakout of this pattern on the 21st of March at 584. If the cup breaks the left side lip decisively, that says it should go to at least a peak D. Well, lo and behold, it went to the peak D. It went to the peak D at $6.85 on the 28th of March. Pulls back for 1 day. Makes a fractionally higher high at $6.88 on the 2nd. That's peak E. And now it's making a high level consolidation. Number one. The MACD is very good. Stochastics at 91%. But it's saying that there's a chance that I might be able to do either a rectangle or this now becoming very well known oval formation, the old golden egg. And that says it could pull back. And as long as it doesn't break decisively under 645, 642 in the next 2-3 days, but just chops around this area, it could have one spike, and that spike could take it maybe to $7, $7.10, maybe $7.15 maximum. But then it should start to come down. That depending how long the oval pattern lasts, it could be sharp or it could be just another test of the support. That means I've got to look at the weekly chart, and the weekly chart is in leg D with a potential doji candle. This is only this is the fourth day of trading, so there could be a doji candle. But the MACD, the moving average convergence divergence, this middle chart here, the weekly, is stronger. The stochastics making an M formation. So far, that's good. And the 200-period moving average is at $6.40. You can see how we're getting a whole bunch of information that says 640 to 622 is probably going to be very important support in the near term to short term. I'm talking about 3 to 9 trading days. Now we get to the weekly chart, and the weekly chart says, hey, I'm a monthly chart. I'm acting very well. The MACD has gone very nicely with the histogram, these vertical bars, very strong. It's got the stochastic at 81%, and that's the reason why I wanted to ask you the question about your positions. I'm going to make a suggestion here, and it's when you're in at that price, 10 cents, 14 cents is a big percentage, but it really is not going to make any difference to your overall position because you've got a really good gain. It isn't a double, but it's real close. So here's don't do this right away. Think it through. Think of the connotations. Think of your wanting to push all the way to July. Is it that would be 1 year?
Yeah, I started buying the first part of July.
Yeah, you see, because if this is peak C, and I'm looking at this is what I'm looking at. If you're looking at my charts, are you looking at Tiger TV?
Yes.
Okay. You'll see that there's a chart, a bar that I've highlighted. It is the September of 2011 bar that has 778 as a high and 580 as a low, but it opened at 663 and it closed at 655. That long-legged doji candle says that it is a magnet. So the price of 663 would have been my target on the upside. So far, it's gone to 668, 688. So it's actually it's gone beyond. And that says, great, now we can look at the top of that candle, which is 778. So I wouldn't be surprised if the target for this, looking out, even with a pullback, and a pullback could even go down to the 620s, or even maybe to the 580s, that looking out, it could go higher. Now, do you want to give up that kind of capital gain? A point is different to 10, 15 cents. So here's my thinking. Go through this. I don't even think you have to rush, because I can see it maybe pulling back 20 cents if we have a very strong market dip tomorrow or something like that. But in the meantime, take your time. And what I'm going to suggest is this. You've got two positions. You don't want to split them into three. It starts to get complicated with the bookkeeping and all that. Keep them as two positions. The position that you got lower down, keep as a core position. The one that you got just slightly higher, keep that as, I don't want to call it a trading position, but this is the active position that you're thinking of right now. I'd be inclined to take something off that position at 671 right here, and that's a position that I'd like to put back on if CADX, Cadence Pharmaceuticals, goes down to between 640 and 622. I'd like to, somewhere around there, I'd like to put it back, because it'll be 50 cents lower, and even if it drops, you're still in a way better position. Your only question is, it's a pharmaceutical. Things can happen there. I don't think it's biotech. Is it biotech or is it pharmaceutical?
No, they're biotech.
So if it's biotech, maybe I have to have a slightly different strategy. I'm going to suggest take something off here. It's gains that you've got. It's a short-term gain. It's unfortunate. It doesn't have to be the whole thing, but it's only the position that you're taking off of your your highest position. And that one you can split into two. So you're going to maybe take something off here, and that position you'd like to put that amount of, whatever you take off, that amount of money you get, you'd like to put it back in lower down. And that could be within the next week or two. The magnet of 640 on the 200-period moving average says that there's a really good chance that even if it pulls back to 590 or 570, it's coming back to 640 to retest. I don't think it's going to drop that far. I think that's 620 to 610 or even $6 area is. My eye says that that's probably what it's going to pull back to if it does. So that means you've got that one. Now, the other position, you see, we're in April. You've got May, June, and the whole of July. I sometimes think that capital gains, I don't look at a stock as a capital gains entity. I look at it as making money or losing money. I've seen too many people over the years, not so much lately, but there was a period where I used to scold people who say to me, they are looking for capital gains, it's December, and they want to hold it into January. And I say, you know what, between now and the end of November and December, this thing could go down 30%, then you've lost all your potential. What's the point of capital? I'd rather pay capital gains on a really good gain, short-term gains. You know what I'm saying, right? Let's look at the stock. Let's not look at the tax implications. So my suggestion is to somehow take off a little bit in this area. I would say that in that second position, the one that was bought higher up, if this thing starts to break and really hold underneath $6.10 to $6, I'd be inclined to start, maybe I'd get a little cautious in that one position. I would still keep the call, because this is where I could be wrong, but my eye for the weekly chart says it's going to go to the 750 to 770 area over the coming 2 months or so. So I hope that helps you. Now you had a question about Apple. So let me just answer this as succinctly as I can. Very often, for instance, the volatility index is an indicator that I've used every day for, I don't know how long, just maybe 20 years. I don't know how long I've had that as an indicator. Not necessarily in the form that I have as a in terms of the ChapmanWave methodology, but I've used it. All I can say is there are times when the people are talking about the VIX being so low, but actually all it is buying pressure. It's not a matter of being so low that it has to rally. It doesn't know it has to rally. It's low for a reason. So there's a certain point where Apple will become less a part of the Qs, become less a part of the S&P, and people will not be talking about Apple as such a big deal, even though it will be effective and effective. It won't be as big a deal. Now, your concern wasn't about Apple. Your concern was the relationship, correct?
Absolutely.
So my answer to you is, let's forget about the relationship as being the most important thing. Let's call it an important thing, and it certainly is, because if Apple starts to break, and if Apple goes to my target of 396 which is the 200-period exponential moving average over the coming month or two, that 30-something point, that 9%, 8% pullback will drag the Qs down a good percentage, maybe 3%. I'm not sure exactly what it would be. So yes, it does have an impact, but I'm beginning to see that Apple is starting to form some kind of a base. I've got it in the monthly as potentially walking the downtrend line with very strong support in that 395 area, but there's a chance that Apple could just start to fail and eventually go to the 353 area sometime this year by October or November. So I hope that answers your question.
Okay, thanks, Basil.
And thank you so much for calling. I appreciate it. We'll be back with John in Philly. I hope he's still waiting. John in Philly straight after this break. Dow's up 19, S&P's up 3.57.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today. because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, everyone. Basil Chapman here. We're going to go straight to John in Philly. Hi, John.
Hello, Basil. Good day to you.
John, I'm going to ask you for 1 second. I've got a question about, and I've been waiting to do it, and I completely forgot. Now I've run out of time, so I'm going to do it. One of my subscribers asked about Netflix as one of the questions for TFNN, for Tiger Financial News. I mean, so for the Tiger Technicians Hour. So I just want to, if you don't mind, I'm just going to say 168.40 for Netflix NFLX right now in the rectangle formation. There's a lot of evidence that says if it takes out 156.63, the low of the 29th of January, there's a good chance it's going to go zipping all the way down to 139.62 to test the gap. My suspicion is that it's going to test the gap, but it will not fill the gap at all. 103 is the low. It's going to go into the gap. The worst case I see is like 135 to 133. Then it bounces back, and then, I don't know, but it looks like it could be ready for another bounce. So the most important thing is Netflix is making a potential oval pattern in the weekly, but it's made a peak E. MACD is good, stochastic's pulling back, and the monthly is still good. I think this is a timeout for Netflix, a very important one. So the upside is 178, strong resistance. I see it coming down slowly, lower lows, lower highs, but it's real close, within 10 to 13 points of a pretty good rebound. Okay, John, sorry, your question is?
Basil, the S&P index, since the close on Thursday, March 14th, that's probably 15 trading days now,
yes,
has done virtually nothing, tight trading range.
Correct.
So that's what's gone on past 15 days. We had a little dump yesterday, a little bounce today. I'm asking today if you could please post up your version of the trading index, Dick Arms deal, and what signal that is giving you today on this little bounce.
Okay, that's a great question. I was about to talk to that particular issue a moment ago. But first, let me just say that it's not a narrow trading range. If you look at the S&P index, it's made a peak E in the Chapman wave. The MACD has deflected lower. Stochastics at 72%. It's holding really well against that backdrop. But there's a real good chance that if it takes out the low of yesterday, 1549.80, it'll immediately go to the bottom of the long-legged candle of 1546.22 made on the 25th. Now let's go to your question, and that says to me that the trend, I get very nervous when I see a sentiment indicator like the short-term, like Richard Arm's short-term trading index called the trend, down at 0.66 with a low today of 0.53, a high of 1.34. When I mentioned yesterday that the trend was kind of ignoring the move down, it should have been up in the 230s or 240s. That to me says be careful. That implies that it still has room to go up. So if the market today, we're up 12. Let's say by 3 o'clock the Dow is down 35, S&P is down 3.75 to 4.25. Suddenly we're going to be watching that trend index. If that trend index still ignores it, it would imply to me that we've got more time in this consolidation until it recognizes it. I did not get a signal today to say there should be a very strong S&P bounce within 1 to 2 sessions. I think that answers part of your question. The other part of the question is that the VIX index is at 14.48. I put them together, the volatility index. If the volatility index over the next 3 to 4 sessions starts to get to, if it gets above that former peak C of 15.39 into the 1540s, especially the 16s, it's saying there's going to be more downside. So right now it's saying, hey, we're ignoring this a little bit, but there's another shoe to drop, and I'm going to be watching that real closely. It's a little too benign. It should be, both of them should be quite a bit higher. So I'm quite cautious here. Hope that answers your question, John. Thank you very much. Folks, thank you for being here. I'll be back with Tom at 5:20 this afternoon.